The market just closed. It was yet another ugly day. The Dow finishing 468 points, off nearly 3%. CNBC's Sharon Epperson joins me now. Sharon, is this all related to China, or is there more at work here?
There's a bit more at work here, Craig. We are looking at a sell-off here to start September that a lot of investors did not want to see. Of course, the data that we got overnight from China on manufacturing, on factory orders, was weak. That was something that precipitated the slide that we saw early in the session, and it got even greater later in the afternoon after we heard from a Fed official who said, based on the jobs numbers that we're seeing, it seems like the Fed's target for raising rates has been met. That is a Fed official who is not a voting member of who will decide what happens to interest rates. But still, when the Federal Reserve speaks, the market listens. And that is something that some traders are saying contributed to the slide that we're seeing. Others say, hey, we're looking at the last few days of summer for some people who are still on vacation. We are also looking at a week where there's not a lot of news coming out in terms of what will drive market action here in the U.S. Not a lot of earnings reports from U.S. companies to give the market any lift or cause it to slide, whatever the case may be. So we're just looking at this sell-off exacerbating. We are at a point now where the NASDAQ has wiped out all of its gains for 2015, and the Dow and the S&P 500 are in correction territory, meaning they're below 10% from where they were at the highs of the recent months. So all of this is concerning to a lot of investors, but others say, listen, if you've been in the market a long time, you know this is bound to happen. It is a natural process in the markets. We just haven't seen it for about 4 years.
We know the losses were widespread today, Sharon. Who are the biggest losers?
Biggest losers seem to be financials, energy, and we're also looking at materials companies that have seen big losses, more than 3% or so. If you own those stocks, hard hit today.
One more question here, really quickly. You mentioned the comments from the Fed member. Is it reasonable to deduce at this point that interest rates could very well be going up, and if that's the case, we may see more days similar to the one we're seeing today?
Absolutely. We are looking at many people were thinking that perhaps the Federal Reserve will raise rates in September or definitely by the end of the year. This commentary leading a lot of traders and investors to think that maybe we will definitely see the Fed raise rates in September. Of course, we don't know for sure, but we do know that interest rates are going to rise sooner rather than later.
Sharon Epperson for us from CNBC. Sharon, thank you so much.